Hi everyone, this is Dr. Nitin Chhoda and welcome to this video on CARES Act 4, the future of stimulus legislation and a big announcement from the Treasury Secretary Steven Mnuchin. I'm happy I was able to pronounce his name, Steven Mnuchin. It's not a very easy name to pronounce. I thought my last name was a little challenging to pronounce. It's Chhoda. But Steven Mnuchin actually does take the cake because Mnuchin is harder to pronounce than Chhoda. In this training video, I'm going to go over three things. The first, the administration's priorities according to the Treasury Secretary in his exact words. Number two, I'm going to go over exactly which industries are very likely, almost certain, to get help in the next round of stimulus. These industries include hotels, travel, entertainment, and restaurants. And finally, I'm going to talk to you about what's likely to happen next. I'm actually going to go over an interview that CNBC's Jim Cramer did with the Treasury Secretary, and I'm going to break it down for you and help my subscribers and my viewers read between the lines. Now, just to recap our system, the House sets the rules, the Senate and then the President sign off on those rules, and then those proposed bills become law, and then the Treasury Secretary makes important decisions about the allocation and the distribution of money throughout the economy. All of the economic impact payments, which you know as stimulus checks, all of the paycheck protection programs that have gone to employers, the Main Street lending program, the economic injury disaster loans, all of them flow through the Treasury Department, and the decisions by the Secretary of the Treasury are extremely crucial to help us to get out of this recession that we find ourselves in. So let's go ahead and take a look at this interview that Jim Cramer did with the Treasury Secretary Steven Mnuchin, and let's break it down and analyze what he said, because there's some really important points in this interview.
There's been tremendous success with PPP because there have been very few companies that have gone under. And I think that what I was surprised about, Mr. Secretary, is there's still some money left when the money, frankly, is something that keeps businesses alive. It seems quizzical. What's going on?
Well, Jim, first of all, we couldn't be more pleased with the success of the PPP, and you saw that in the unemployment numbers. So not only did we save millions and millions of jobs, but there's no question in my mind the increase in jobs was a direct result of the PPP and reopening the economy. Those are both very important factors.
Now, this is important because what Jim Cramer said was that not all of the money in the Paycheck Protection Program was actually used up. And the Treasury Secretary actually talks about this in a minute or so. But the important thing here is the recent jobs report that came out. And I did another training video on my channel about the May jobs report that came out. It was extremely encouraging because it was actually better than the April jobs report. And there were a couple of signs in that report that point to a recovery in the economy that actually imply that most of us will be able to get back to work, which is an excellent sign. So as you can see, the Treasury Secretary is starting to take credit for that, is starting to take credit for the $3 trillion CARES Act that was passed, and is starting to take credit for all the money that's now starting to flow through the system by way of the stimulus checks. Now, I know a lot of us haven't gotten our stimulus checks yet. I know a lot of us are still waiting for unemployment because guess what? The system is not perfect. This is the first time that the government has had to do this in the history of our country. But let's hear what he has to say and what lies ahead.
Remember, when we asked Congress for money, they were afraid we were going to run out again, so they gave us an extra $60 billion. So when we modeled this, we didn't think we'd end up spending all this money. And now that we've given the restaurants more flexibility of 24 weeks, which that was the number one ask they had for the president when they came in, my guess is that you're going to see the restaurants come in and now take up a bunch of this money. But we're in productive discussions. Yesterday I was at the...
So this is where the Treasury Secretary talks about restaurants who have been the hardest hit in this entire pandemic. He talks about restaurants taking up the rest of the Paycheck Protection Program money, all of which has not been claimed yet at the time I'm recording this video training. Because there were amendments made to the Paycheck Protection Program, in other words, employers and small businesses now have more time to spend the money and now don't have to spend 75%, but only have to spend as much as 60% towards payroll. It gives them more flexibility to be able to get back into business and spend the money that they've got. This actually, before this amendment happened, a lot of businesses were hesitant to take out the Paycheck Protection Program loans, but now they will. And so this is a good sign. So what the Treasury Secretary is talking about is actually good, because this is a good thing that the administration did for people who took the Paycheck Protection Program loan.
SBA committee, and huge bipartisan support for this program.
Well, look, as someone who follows the restaurant community well and is involved with associations, I think it has been miraculous because that's where 13 to 14 million people are working. But rent. We have to talk rent throughout the system because rent's been okay as there's been a lot of forgiveness for the last couple of months and you can't evict. But that should be the next. You gave great flexibility with PPP. You allowed more money to go toward rent. But what do you do with all the landlords who have mortgages themselves and the restaurants that may not get the traffic in but have to pay that rent?
Now, this is a very valid question from Jim Cramer. There's a residential aspect to this and there's a commercial aspect to this. From a residential standpoint, there have been moratoriums on evictions. In other words, a tenant who's unable to pay their rent cannot be evicted. So there is some relief on the residential side, but the commercial side is not as simple. There are a lot of complications to the commercial side because even if a restaurant is not open, the restaurant still has to pay rent. And then the landlord still has to pay their mortgage. So the Treasury Secretary actually addresses this, and let's hear his response.
Well, Jim, let me just first comment on the residential side. And I think the moratoriums really helped on the residential side. And you know, when you look at the numbers and the number of people, it was not overwhelming, the number of people that needed to do this. So again, I think that's an indication of the $3 trillion we pumped into the economy, both in terms of the economic impact payments and PPP and extended unemployment. And on the commercial side, you're right, it is more complicated. You have companies, particularly in retail, that are having a lot of issues. They're going to have to deal with the rent. The landlords then have to deal with mortgage payments. And that's why I said yesterday, when we look at the next round of CARES 4, I think one of the things we're really going to need to be very focused on is how do we help the industries that are especially impacted. And I would say, you know, hotels.
This is very significant. Not only did the Treasury Secretary mention CARES Act 4, which means something else is very likely coming down the pipeline. Remember, these officials aren't going to put something out there until they're fairly confident that it's going to happen, until there have been a lot of talks internally. And this reveals that there have been talks internally of a CARES Act 4. In fact, he specifically says that certain industries are going to be helped. And let's listen now to the industries that he's talking about.
Travel, entertainment, restaurants are right up there. So we're going to need to be much more targeted in making sure that we get people.
He said hotels, travels, entertainment, and restaurants. And he said we are going to be much more targeted in the next round of stimulus in CARES Act 4, in the words of the Treasury Secretary.
Back to work, and we help these industries, and the president and I won't be done until we get every single person back to work.
Mr. Secretary, how closely do you follow things like the monoclonal antibody test from Regeneron or Lilly, or the possible Moderna or J&J vaccines? And I say that because if you give us that bridge, including the $600 unemployment, and we get to the end of the bridge.
Now, if you've listened closely to the interview so far, you'll already have picked up a couple of hints about the Republican approach versus the Democratic approach. Republicans want individuals to get back to work. These are his exact words, get back to work. Because what Republicans want to do is make sure that the money that they've pumped into the economy is received by individuals, is spent by individuals, starts to make its way through the economy, because it is their belief that when that happens, the economy will get back on its feet. It is their belief that instead of simply giving people more stimulus checks, people need to get back to work. I've done other training videos on the proposed $450 a week get back to work bonus from Senator Rob Portman. And essentially, the Republicans want individuals to get back to work. They don't want more stimulus checks. They don't want an unlimited extension or a significant extension to unemployment benefits. And one thing that they certainly don't want is for individuals to make more money on unemployment and be home and not be motivated to work. This is extremely important because that $600 a week federal booster, which I have talked about in other training videos, you should check out the unemployment benefits crash course on my channel. But that $600 a week federal booster is actually allowing a lot of individuals, millions of individuals, especially the low wage earners and the middle income earners, to make more money on unemployment than they made during their regular job. And this is a loophole. This is something that the Treasury Secretary wants to fix. Listen closely to what he says right now.
Things are going to be, look, I'm going to say it, they're going to be spectacular. So do you monitor it and say, you know what, we got to keep this thing going? Or does there come a time where you just say, all right, we've done everything we can and let's hope science prevails?
Well, we're never going to say we've done everything we can. We're going to do everything until we get rid of this virus, both economically and on the medical side. You did mention the unemployment. Let me just be clear. You know, we knew there was an issue with the unemployment where some people were getting paid more to stay home than to work. So whatever we do with unemployment, we're going to fix that. But on the medical side, and I can't comment on it.
Now, he said whatever we're going to do with unemployment, we're going to fix that. Now, the $600 a week federal booster is a lifeline for individuals. I personally am in support of it because I know that a lot of us lost our jobs or had our hours cut through no fault of our own. But the Treasury Secretary of the United States specifically said we're going to fix that because they do not want individuals earning more money on unemployment than they made on their regular jobs, because in their opinion, that acts as a disincentive that discourages individuals from getting back to work. The Republicans want us to get back to work.
Any specific one of these, but I can tell you we had a very productive update this week at the task force. The vice president led us, and we had a presentation on both the viral and the vaccines and the investments that the U.S. government is making. And I'm quite optimistic in the medical progress that we have made and what will be done between now and the end of the year. And Jim, let me just say, as we reopen the economy, you know, as I have said before, I think you're going to see a pretty big rebound in the third and fourth quarter. I know the Blue Chip survey for GDP has a growth rate of 17% in the third quarter. So with the reopening of the economy, with the $3 trillion plus a new round in CARES 4, I think you're going to see a lot of Americans getting back to work.
This is extremely significant because the Treasury Secretary of the United States is extremely bullish about what lies ahead, is extremely bullish about the fourth quarter and next year. I did another training video on the projections from the Federal Reserve about the GDP, the gross domestic product, over the next couple of years. They're going to keep interest rates close to zero for the next couple of years. So it's going to be less expensive to get a mortgage. It's going to be cheaper to get a car loan. It's going to be cheaper to get a personal loan, a business loan. This is all done in an effort to boost the economy, in an effort to get the economy going so people spend more. A significant component of this is individuals being able to get back to work. And as you can see, the Treasury Secretary was very optimistic about the information coming out of the task force, which is basically the unit that's designed and that exists in order to help us find a way out of this, whether it's a vaccine or other social distancing measures. So basically, the bottom line is this: there are certain industries, specifically hotels, travel, entertainment, and restaurants, that have been badly impacted. These industries have the low wage earners and the middle income earners, and these are the ones that are going to be the last to recover, in my opinion. I am a licensed physical therapist. My wife is a licensed physical therapist. I work with physicians and doctors all over the country, and I know that healthcare is already recovering because people need to go back to their doctor. People have pain, people have discomfort, people need their medication. So all of that is already recovering. However, these industries, hotels, travel, entertainment, and restaurants, these are going to be the last to recover, which is exactly why, in the words of the Treasury Secretary, there's going to be a targeted response. There's going to be a targeted measure in order to be able to provide them with more stimulus. What I foresee is CARES Act 4, the future of stimulus legislation, will involve money for those businesses that are least likely to recover, or in other words, will take the longest amount of time to recover, which makes a lot of sense. Now, no system is perfect. I know a lot of us haven't got our stimulus checks yet. I know a lot of us still haven't gotten our unemployment benefits. But again, no system is perfect, especially when you're talking about tens of millions of people, when you're talking about a system that was never really designed to withstand that level of pressure. I hope you learned something new from this training video. I hope you're optimistic about the future, because these are good signs. For me, it's not about the red or the blue. For me, it's about the red, white, and blue. For me, it's not strictly about livelihood. It's about balancing lives and livelihood. Again, I hope you learned something new from this video. If you did learn something new, please click the like button below. That's all I ask from you. I would really appreciate it, and that does help out the YouTube algorithm. Share this video with your friends and family. Share this message of hope. Share this message of optimism, so that we can be looking forward together to a better future. Please click subscribe if you're not a subscriber yet, and please enable notifications so you get an instant update. Thank you so much. I'll see you in the next training video. Thanks. Bye.